Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Here we are for another episode of Black and White Market Minute on Life Planning 101. Matt Ervin and Aaron Kennedy wrapping up a heck of a week. Aaron, Fed Powell spoke today.
Yes, this was actually a really big day. The Fed, a bunch of economists, bunch of publicists are in Jackson Hole, Wyoming right now. And
Yes, sir.
This is a big deal. They have a big meeting, and they get up and they talk to the press. And every year, this is one of the big meetings that everybody looks forward to. Yesterday, the market was up pretty big. It was up 2% or a little bit greater than that.
Yeah.
Everybody was anticipating Powell coming out and saying, whoa, enough's enough, let's stop.
Right.
So the market was super excited, and we kind of got the rug pulled out from under our feet today.
Well, he meant a little business, didn't he?
He meant business. It was interesting. I was watching this morning, and we had different Fed presidents come out and talk, give their ideas. Ballard came out and said what the market wanted to hear. Hey, enough's enough. Let's kind of slow down and see what happens. You know, that's what the market was expecting to hear. It's not what Powell said. Powell said price stability is the most important thing. He's willing to let employment soften in order to help prices, help inflation. And he said, be prepared for below trend growth. He's already come out and said that he knows what they're doing with interest rates is destroying demand, which means I'm not going to have the money to buy the stuff I want. But now he comes out and says, just expect it. This is what I'm going to do to get inflation under control, which is below trend growth.
You know, we always talk about, is it an and or is it an or? And the market gets so choppy on that short-term high-frequency data. And so it says a sustained period.
Yes.
The market's going to try to decipher what the heck that means, but
He's serious. He wants inflation down, and he's not going to stop until he starts to see it slow down.
when you made a point about the core PCE, 4.5%, trying to get that down to 2 to 3, is that what you said?
Yeah, he wants inflation at 2%. And I don't know. I don't even know what core PCE would be at 2%. Normal inflation, he wants it back to where it was at 2%. Core PCE is what he looks at to really gauge inflation in the United States. And if what he's looking at is 4.5 or so, that's where we should be with interest rates to have a neutral interest rate where it's not slowing the economy or gassing the economy. Guess we're not there. We're not even close. We're at 3.1 on the 10-year. We got a long ways to go. He's going to have to move interest rates a lot more. And it's just 1%. That's nothing. No, guys, that's 33% move from where we are. Money's going to get 33% more expensive
on top of what it's already done.
Already done.
Yeah. So, and I was listening to something the other morning, and I got a tickle out of it because the particular program I listen to, they talk about this data all the time, the high frequency data. And he's like, whoa, guys, don't forget, we don't need to trade on the high frequency data. We need to focus on the trend. So we talk a lot about this stuff as if it's like the most important thing each week, and we watch it every day.
Yes.
But we're looking for trends, we're looking for patterns, we're looking for flows, stuff like that. So, and we hadn't even got into, we talk a lot about it, the quantitative tightening. We talk about the strong dollar, but there's not many people talking about that.
No. And it's strange. It's like we've forgotten, hey, this is just the beginning. Right? This is just the beginning. Next month, we're supposed to start buying our bonds back.
So just to touch on that, it always helps me to think through it. So when they create dollars,
No, selling their bonds back.
right?
Say that backwards.
Well, no, and it's basically when the Fed creates money, they don't just like go literally hand out a dollar bill, right? They buy and sell bonds to create available cash in the marketplace. So
yes.
they're now going to start tightening some of that back because they took so much and they gave cash out, right? So they're going to say, I don't want to hold it anymore. I'm going to sell it back.
Yeah, I'm getting it off my balance sheet. And this is going to have the same effect of increasing interest rates on our economy.
Right.
They're sucking dollars out of our economy. And, it's going to slow everything down. And they've been doing this for so long. You've heard about the bond buying and the QE, loose policies. They've been doing it for so long. They're taking away the Kool-Aid.
Right.
They're talking so tough that the game is over.
Right. But even to that point, so if they stopped raising rates today, which they're not, but if they did,
right,
that quantitative tightening can still offer, maybe 50 basis points of a feel, and then the strong dollar, another 50 basis points. So we could have a whole nother, quote unquote, rise in interest rates, even with them not moving interest rates. There's those other factors that play into that.
Yeah.
And again, nobody's talking about that.
Overseas, Europe, inflation is double digits. We got it good. It's only 8.1 or something like 8.3.
Right.
We have it really good. And this strong dollar is helping us. Right. And you were telling me this morning the Fed is counting on that. And, we had a little conversation of, hey, we have leadership change when it comes to currency, who's strong and who's not, whether it's the euro or the dollar or whatnot. It doesn't stay that way forever. So if it's a real big benefit to us today, more than likely that will reverse, because almost every country out there is dealing with the same problems we are. And they're using the same tools to fix it.
That's right. That's right. Well, and you mentioned Europe. One of the things going on so relevant there is gas prices, right? Through the roof. So we wanted to touch on a little bit about, there's still, ironically enough, are still overpriced places in the market when you look at PEs. Earnings stayed pretty strong. I mean, maybe not what we'd love them to be, but
nothing fell off a cliff, really.
That's a better way to say it.
Yeah,
that's a better way to say
earnings came in really good. The only takeaway on earnings was a lot of companies said, we really don't expect next quarter to be good. Or next year's. Their guidance was weak, pretty much across the board. But it was before this. We were all expecting weak earnings, and they came in great. And companies are kind of tempering our expectations. But it was a good shot in the arm of, hey, things haven't worked its way through the economy yet. Things are still strong enough to keep us afloat.
Right. And some of those places that are obviously Texas here, we like our oil and we like our gas, right? So thinking through that, and they're actually one of the cheaper places in the market. The commodity price itself, the oil and the gas, is staying elevated. But the companies that help produce that into a consumable are decently priced.
Yeah, they're still decently priced. And a lot of them really are underneath 2008's prices. Even with this huge move we've seen over the last 12 months or so, we're still lower than all-time highs.
Aaron, I hate to cut you off. We're getting a little long in our time, but we do want to say that, we're going to have probably some volatility coming up. The Fed has another meeting about a month from now. They're not going to be overly verbal between now and then, so expect some volatility. We're going to look to find those cheap prices. And at the end of the day, you say it the best, the market wants to climb a wall of worry. So stay focused, stay hooked. If you guys have questions, give us a call, shoot us a note. We're here to help, we're here to serve. We want to take care of all you guys, and we appreciate each and every one of you.
Yeah. God bless, and y'all have a great weekend, and we'll talk soon.
This is Matt Ervin and Aaron Kennedy signing off with Black and White Market Minute on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.